First of all, I want to say I'm not a financial advisor. Any content is just for entertainment. If you could give the video a big thumbs up, this really helps to reach a wider audience. With that being said, let's get on with the video. The S&P 500 Index, one of the most recommended places to invest your hard-earned money, and for good reason. Since 1957, it has averaged an annual return of 8 to 10% with dividends reinvested. It's also the home to the top 500 companies in the US by market cap, so it's a pretty safe place to put your money. It's also low cost to invest, so you'll be saving on fees that you'd generally be paying out for other funds. And this is what I normally recommend, especially if you've got a lump sum to invest or you're young and you've got a dollar cost average for the next 10, 20 years. But what if you haven't or you're not? Well, you just want to grow your wealth quicker and maybe just get a better return for your money. Now, with so many fund managers failing to beat the benchmark, the S&P, I wanted to find out which funds, if any, consistently beat the index over a certain period of time. So let's start with our first fund, which is the Bayley Gifford American Fund. Aims to outperform the index by 1.5% per annum over a 5-year period. So if you're looking into investing in this, you really do need to be thinking about long term. Some of the biggest holdings include Amazon, Wayfair, Tesla, and with their biggest holding being Shopify at 8.6%. It's beaten the index over 1, 3 and 5-year periods, with a 107% return between October 19 to October 2020. It's also on Hargreaves Lansdown the Wealth shortlist with the potential to outperform its peers. Okay, let's move on to number 2, which is the AXA Framington American Growth, which is also in the North American sector. Launched in 1992, it has managed to beat the Standard & Poor's index over recent consecutive years, with a 5-year cumulative performance of about 175%, with a year-to-date performance of about 30.6%. Major holdings include Microsoft, Apple, Alphabet and Facebook. Again, there's no initial charge or dealing charges, but there is an ongoing charge of about 0.82%. and with a £100 minimum investment. Okay, let's move on to number 3 on the list, which is the Ubs Us Growth Fund. Again, you should be looking to invest long term for at least 5 years. And there's a 5-year trailing annualized return of about 22.24%. And it says on their website that the aim of the fund is to outperform the Russell 1000 Growth Index, which is made up of the top 1,000 large cap companies in America. The fund is made up of 80% equities, but also includes warrants, bonds, cash and currencies. It's a transaction cost of about 0.06% and an ongoing charge of about 0.83% with a minimum investment of £25. Right, let's talk about number 4 on our list, which is the Threadneedle American Extended Alpha Fund. Launched in 2007 by Nicolas Janvier, with a fund size of about 71 million. It says it aims to achieve above average capital growth. Again, you want to be looking to invest for at least 3 years. It's got 75% of its holdings in American companies, with 93% invested in stocks and the remainder in cash. Its top 5 holdings include Alphabet, Morgan Stanley, Cisco Systems, Salesforce and MasterCard. Year to date, it's returned 19.16%. and has a 5-year annualized return of about 19.19%. And it also has a minimum investment of £100. There's no dealing charges, but there is an ongoing charge of just under 1%. Last but not least on our list is a fund by a man called Terry Smith, who's become a little bit of an investment legend. He runs a £30 billion equity fund, returning over 440% since it was first launched in 2010. It is a global fund to include countries like UK, France, Spain, Finland and the US, and has consistently outperformed the global stock market and its peers within its sector. Top 5 holdings include PayPal, Microsoft, IDEX Inc., Estee Lauder and Intuit. So there you go. That was 5 funds that have outperformed the index over a 5 and 10 year periods. If you did like the video, please give it a big thumbs up and please subscribe to the channel. And I will see you in the next one.